Hi guys, Max here, and once again we are back for our market update videos again. So what exactly happened yesterday? Well, markets were just very volatile and they just ended up closing up for the day, but it was not easy going though. Big tech actually did well for the most part, as you can see, except for Amazon and Apple, which didn't really move much at all. Facebook and Nvidia were up about 5% though, Microsoft and Tesla up around 3%. Tech actually did alright and really carried the rest of the indexes because the old world industries, traditional industries like real estate and consumer defensive, actually did really rather poorly. Healthcare was quite poor too, financials were fine but nothing special. Really, the only industry that actually performed well for the day was tech. Now, the S&P 500 as a whole rose by 0.5% and the Nasdaq rose by 1.6%. In Europe, the Stoxx 600 fell by 1.4%, which was really rather poor. And of course, UK markets were closed because it was a bank holiday here in the UK, so there were no moves from us. Now, despite rises in the US, it wasn't easy going, as I said. The S&P 500 was down by 1.5% a couple of hours before closing. It was the first new day of the month though, and it was actually okay, of course, following what was the worst month for the Nasdaq or just tech stocks in general since 2008. So investors really welcomed it. I really don't expect this good news to last for particularly long though, for obvious reasons. Now, there was some weirdness in the markets as well. In Europe, there were flash crashes for about 5 minutes, as firstly, the OMX Stockholm index dropped by 8% again over the course of about 5 minutes before rising back up to where it was. The same sort of thing happened to the DAX, the IBEX, and the AEX2. Basically, a bunch of European exchanges saw quick mini flash crashes. It seemed at the time that someone very big got liquidated or just put in huge sell orders that happened instantly, and that was the idea, but it has now emerged that London Citibank made an erroneous transaction before algorithms and anyone lucky enough to be trading at that time bought the dip, forced markets up, and had a good day. Unfortunately, outside of just Citibank making an erroneous transaction, we don't really know what happened, but someone probably lost their job. The VIX has been super high recently and sitting above 30, indicating huge volatility, with index moves above 2% per day fully expected. We're also expecting a 50 basis point rate hike later in this month by the Federal Reserve, which is not long away now. If we see a 25 basis point rate hike, then inflation expectations will continue to get worse, but markets might still rejoice in the short term on that news. A 75 basis point rate hike is a little bit unlikely, but it is possible and it's on the table, and it would probably tank markets. At least it would be a strong move to tame inflation a little bit though. The dollar continued to do quite well against pretty much everything, the yen, the euro and the pound, as we have been seeing for a while now. Bond prices continue to fall and yields rise. US 10-year Treasury yields are up 5 basis points from the prior to the weekend. They're now sitting at 2.98%, so close to that 3% yield that we've been waiting for. Oil prices are also staying pretty high, and they actually rose very slightly. WTI crude oil is at $105 a barrel and Brent crude oil is at $106. Energy prices are just staying high. There are, of course, the China lockdowns that are going on, and there is loads of outrage and almost riots at this point in China over those lockdowns, lots of lost productivity, and this should all be pushing oil prices down, but upwards pressure from elsewhere in the world seems to be enough to counteract that effect. Then we have gold prices, which have actually fallen by about 2.6% over the weekend, which is actually really nice. Right now, gold is at $1,860 an ounce, which is exactly what I've been waiting for to start buying back into gold again, below that $1,900 mark, and I'm a happy investor. Finally, with crypto, what's going on over there? Well, it was actually a relatively stable weekend. We left Bitcoin sitting just above the $38,000 mark and Ethereum just above the $2,800 mark, and both are still sitting at that rough level, so no major changes there. It was just a pretty stable few days. It might seem on the surface like there isn't really any bullishness or bearishness with the crypto markets, but the overarching trend does seem slightly bearish. Bitcoin has now seen 5 consecutive weeks of declines in a row. Now that is the first time that has happened in something like 6 or 7 years, so that is very bearish. It's not really crypto's fault though, it's just the changing macro environment and risk tolerances for investors decreasing. Now, as I mentioned earlier, there is lots of chaos in China right now, and the first big news that we had was that Jack Ma might have disappeared again. We're not really sure, and it seems like maybe he hasn't at this point, but this is the nature of an authoritarian state. It's really hard to know exactly what's going on inside the country, especially when it comes to the government. He, of course, got kidnapped, imprisoned, and had his companies stolen from him 2 years ago by the Communist Party, and he's kept a low profile since then, seemingly being defanged by the communists. Now, yesterday, Chinese state media came out and said that someone with the surname of Ma had been detained for what basically amounted to treason for creating internet stuff that was trying to bring about the downfall of the Communist Party, and everyone sort of panicked and thought this was Jack Ma. The share price of Alibaba tanked about 8% on that news almost instantly, but then Chinese state media came out and said that it was not Jack Ma, so stocks recovered. To be honest, it is really unclear if that was said just to protect markets or if it really wasn't Jack Ma, it was just someone else. Either side is very possible. We sort of just have to wait and see. China and their crackdowns on financial markets are very real right now. They haven't stopped these crackdowns as the bulls claimed that they would, and it won't stop either in my opinion because it's simply in the nature of the Communist Party to increase their authority. Now, I put out a long video on this very topic last week. I will of course link it for you all down below in the description, but in short, Chinese markets are not good at all right now. To make matters even worse, there actually seems to be some civil unrest growing in the country too. Lockdowns for the COVID reasons are actually super strong right now. Most major cities in China have some sort of restrictions. We saw Shanghai actually shut down entirely, Beijing as well, Shenzhen, huge cities, 20, 30, 40 million people in them, just locked down overnight. And the Chinese people are really quite unhappy about this. It has now emerged that maybe they aren't quite rioting, but there is certainly civil unrest, protests in the street opposing these lockdowns. It's definitely started. I will show you a quick video here of just what is going on. We see COVID police type authorities. They are losing their authority in the streets of China. This is why I think that China is finally publishing large COVID numbers, not because they're necessarily telling the truth this time round during this wave, but because they have to instill fear in their populace to accept these new controls. This is, though, bad for business and markets if nothing else. It is bad for Chinese stocks in particular. That entire market is just so ridiculously risky. In my opinion, it will never be worth an investment. We've had a little bit of news regarding Biden pushing for student loan forgiveness, and that might be worthy of a video. Maybe I could look at the economics of it, of debt forgiveness, if that sort of thing works, if it's worked in the past, and if it works this time round. Let me know your thoughts regarding that down below, or if that might seem like a better suited video for the politics channel, then again, let me know your thoughts on that. I also thought I'd just add a quick note here on the Elon Twitter stuff developments, because there's been a lot that's been said about the amount of shares used as collateral for Elon's debt and the chance that a fall in Tesla's share price could cause margin calls on Elon, and that would of course collapse the share price of Tesla even further because he'd have to sell his shares to cover his debts. Honestly though, this news is all a little bit overblown and it shouldn't be that scary for Tesla investors. Elon took out loads of debt when Tesla shares were worth far less than they were today. We're talking 5% of what they are worth today. So now the value of those shares has been inflated, but the debt hasn't. If he does meet requirements of those contracts to get margin called, he'd only have to sell about 5% of his pledged shares to actually cover those debts, and it isn't a major issue at all in my opinion. It's actually very possible and maybe even probable that the shares that he sold recently over the last week, about $8 billion worth, he could have used that cash from those sales to pay off those old loans already. We won't know for a while until we get Elon's next financial filing, but really there should be no worries here from that point of view. We also had a little bit of an interesting piece come out from Ray Dalio about investing yesterday in this new financial environment, which I do plan to cover in detail. And we have a little bit of financial drama regarding Warren Buffett and Robinhood, the online brokerage that has an awful lot of hate these days, that I will put a quick video out regarding tomorrow as well. There are plenty of interest rate policy decisions coming out this week from central banks, so lots to look out for, but that is it for today. If you enjoyed this video, then make sure to like, comment, and subscribe to bless the YouTube algorithm. If you want more content like this, then check out our Patreon and join our community of investors. You get access to our Discord, loads of exclusive content like insight into my portfolio and buy and sell alerts for all our own investments. There's a link in the description to masterworks.io, a site that can help you protect your portfolio against inflation through fractional shares of art from world-famous artists like Banksy. Art has historically proven to be uncorrelated to the markets, so it's a really valuable resource with the markets on the brink. It's completely free to sign up, so make sure to check it out. There's also a link in the description to BlockFi, which will give you up to $250 in free Bitcoin when you use it. You can also get over 7% interest on stable coins to protect your hard-earned cash from being eaten away by inflation. Thank you all for watching. Stay stoic. Until next time.